Now, oil prices are higher today with the reintroduced U.S. sanctions against the major crude exporter Iran expected to tighten global supply. Now, U.S. sanctions against Iran, which shipped out almost 3 million barrels per day of crude in July, officially came into effect on Tuesday, which is that is today. Now, a research analyst at the financial derivatives company, Desola Sumoni, joins us now for more analysis of the crude oil markets. Thanks for your time, Desola. Well, Brent crude is up 0.62% to $74.21 per barrel, and that's after a steep drop of 2.4% last week, of course, after the U.S. reimposed sanctions on Iran. Tell us, what other factors are driving oil price?
Yeah, the market is entering a period of slowing supply growth. Like you said, the reintroduction of the sanctions on Iran is expected to take about 1 million barrels off the market. Also, Venezuela still has their production issues, which is expected to take about 400 to 500,000 off the market, or 500,000 barrels off the market. We also have Saudi Arabia. As of last month, Saudi Arabia's production was down about 200,000 barrels a day, bringing their production to about 10.3 million. And in the U.S. here, the summer driving season is reducing the U.S. crude stockpiles, which is expected. Analysts expect that to decline by about 3 million barrels as of last week. So these factors put together are mounting an upward pressure on oil prices. But on the other hand, the U.S.-China trade friction is mounting downward pressure on commodities and including oil. So we are seeing this combination of factors play, and those are what's driving oil prices.
And given the volatility in the oil market in recent weeks, do you think the foreign reserves will continue to decline?
The foreign reserves, as at last month, July, declined, I think, about 1.44%, and month to date it has declined 0.13%, and that simply shows that the inflows into the external reserves are lower than the outflows, and we know that the central bank has continued to intervene in the foreign exchange market by injecting some FX, and this amount seems to have increased month on month. So these factors, and so I think that, well, the volatility in the oil market has little impact on the declining foreign reserves. I think that because of the outflows from foreign reserves still outweigh the inflows, we might still see the foreign reserves continue to decline. But the foreign reserves are still strong at $47 billion.
Desola Sumoni, a research analyst at the financial derivatives company. Thanks for joining us on the program. And that's our show today. Thank you for watching INBC Adebayo.